Let's focus in on the new listing for the day. And despite expectations of a muted listing, it listed at about 83 and now holding at about 92. I'm talking about Tracxn Technologies, and we've got Neha Singh, who's the chairperson and managing director, joining in on the show. Thank you so much for taking time out, Neha. Over the years, the company's growth has largely been on the back of customer addition, but your average revenue per customer has remained stagnant. So what's the plan to grow that?
That's exactly correct. Like if you look at it, we've grown our sort of user base at a fairly good pace. I would say at nearly 30% across the last 3 years. If you see, what happens typically, a lot of the incoming customers basically start small, and the other initiative that we also do is basically work with your existing customers to grow them over time. Right? That's one of the benefits of having subscription revenue. That a lot of your revenue from the in any year is from the customers that you've already acquired in the previous years. So I would say it's a mix of both, that a lot of the incoming customers basically start small, and then we also have a team that works with the existing customers to sort of increase the penetration over time.
Good morning. Congratulations on the IPO and the listing. Carrying on with questions that viewers, analysts will all want to hear about, and that's to do with the high attrition rate. It's not specific to you. Across the board. But if you were to look at the IT-enabled sector, already double-digit attrition levels. At Tracxn, you've got single-level attrition rates. When you look at the industry at large, what are you going to do to curb all of this?
So like most other companies, this is, one of the things that you have to sort of build over time to, gradually sort of reduce across the years. I would say a couple of the things have, I think one of the contributing factors is also that we hire a lot of people from who are freshers or, 1 or 2 years out of college. Typically, we have seen attrition a little bit higher in those. At the company, one of the things that has really worked is we have a very sort of a defined appraisal framework. So all the good people who are able to perform, we give them more and more responsibility, have them grow over the through the organization. So that's probably one thing. And the other thing is that if you look at our senior management, our CXOs, most of them have been with the company for more than half a decade. So I think these are a couple of things that that has sort of worked for us. But having said that, that's one thing that every company has to sort of build towards improving across the years.
Sure, Neha, you managed to report some profits, at least in Q1 FY23, on account of the operating leverage. How should an investor look at your profitability from here on? Is it going to be a consistent uptrend?
Like in building a global data platform like ours, you have to do a lot of initial investment, and that is why we had raised 113 crores in private markets from various investors, angel investors, across the years. If you look at our initial 5 to 6 years, most of our team was in the technology, product, data building functions, because you have to invest a lot in building, a sort of a global data across the different countries. Once you're able to do that, you're able to sort of leverage a lot in the platform that we already built. For instance, if you look at the last 12 months, most of our headcount addition has been in the sales and marketing engines. So a couple of the things that investors actually have found very interesting in our business is one is that across the years, if you look at it, we have had a continuous EBITDA expansion. So across the 3 years, if you look at it, our revenue has increased by 30%. The cost has only increased by 4%. And that is why you could actually see margin expansion that has happened very consistently across the last 3 years. So that is one interesting thing. And even if you look at this quarter versus last quarter, there is a EBITDA expansion of more than 8% that has happened on a year-on-year basis. So that's one thing which people have found very interesting. The other thing is increasing free cash flow. So the other thing is that in addition to being bottom line positive, we actually do prepaid billing. So we do cash collection, invoicing upfront for the entire subscription period, and that is why our cash flows actually moves ahead of the revenues. And that is why last year we generated 5 crore of positive free cash flow if we exclude the IPO expense, which is reimbursable to the company, and which is increased to a run rate of 5.9 crores within the first quarter. So that's the other interesting thing that people have also found it very interesting, that we generate free cash flow, and that has been also increasing across the years.
Well, that's Tracxn for you. Tepid listing, a 6% pop as far as this IPO goes. Thanks, Neha, for joining us live today on the show, the newly listed company.